You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to our interview series here from the 2025 Options Industry Conference from scenic and sunny Palm Beach, Florida. And next up in the Southern studio, our old pal, Mr. Jim Tozy, President and CEO of STA, aka the Securities Traders Association. Jim, welcome back to our OIC studio, sir.
Mark, thanks for having us back. It's always it wouldn't be OIC without sitting down and talking to you for a little while.
It would not indeed. This is a fun annual tradition we have going now. Let's start off. We have a lot of things to get to, but let's start off just top of mind. What brings you to OIC this year, sir?
Well, I mean, what brings us this year, kind of what brings us every year. I mean, this is the best conference for anybody who's in the options industry, no matter where you are in the ecosystem of options. You know, it's as you know, this is unlike equities. You know, there's this whole options ecosystem that people rely on each other for. Exchanges rely on market makers. You know, obviously broker deals rely on wholesalers and the vendors, and it's really such a great time to come down and see these people who all play different roles in the marketplace, kind of like, you know, being guardians of the market and trying to come together to make decisions that's really good for the overall ecosystem.
We'll start on the positive side. We'll get to some of the fun, controversial stuff in a second, but April, obviously a banger month for the options business. The numbers are in here from OCC, nearly 25% increase year over year. Obviously, a lot of external circumstances was driving a lot of that flow, but still just an impressive, yet another hyperbolic move up on top of already what's been just an impressive post-COVID trajectory. What are your thoughts on this just juggernaut that is options volume? Just when you think it's going to take a pause, it takes another huge leg higher.
Yeah, it's amazing. It's amazing how well the markets have held up just from a pure, you know, functionality standpoint. That we managed to open at 9:30, close at 4, and these instruments are all being cleared. I mean, there's definitely no shortage of geopolitical events, tariffs, news in the marketplace. You know, the volumes aren't just crazy in options; they're also off the charts in equities as well. So, I think it just speaks, you know, it speaks so much about all the investment that's been done, technology and building out pipes and making sure things work during these extreme volume moments. It's incredible.
Well, one of the hot things we talk about every year whenever we open up this studio, people roll through here. And for the last few years in general, it's been 0 day, 0 day, 0 day. And our audience always wants to know, when are we going to have more? When are we going to have more? Especially the hot ones, your Teslas, your NVIDIAs, the Mag 7 names. It seems like this year we finally have some movement on that front with NASDAQ filing a proposal to do, I believe it's a Mag 7 plus one, a Broadcom as well, and a limited pilot starting maybe towards the end of this year, beginning of next year. I know you probably just glanced at it so far, but what are your thoughts? And do you think this has some legs? Do you think we're going to actually see this happen?
Yeah, I mean, I think it was inevitable. I mean, obviously, you know, the exchanges, you know, had this idea of going down this product line. You know, years or so ago, there were some obviously concerns with going from, you know, index ETFs to single stock names, given the risk that happens around earnings when they get reported after the close. But, you know, at some point, though, you know, the exchanges have the right to make these filings. You know, and it's really incumbent upon the industry now to make sure that investors have everything that they need to use these products responsibly. So you're right. I haven't read the filing on it yet, but in the conversations that I have had, it does seem like NASDAQ has taken some precautions to help, you know, limit that risk around the earnings that may come out after the close or any type of news. You know, where they're going to be these products will not be trading a certain period before and after earnings. So that's hopeful. But it's still a wait and see. We'd see how this goes. So We do hope that there's going to be some really like enhanced education around this. A lot of conversations being had here on site, like, who can kind of like gather that education? Should it be someone like OCC, given their unique position in the industry? They could probably, put together a couple of one, 2, 3 page explainer on the product and make sure that that's being readily available to any firm that's offering these products to their clients. And because we do think that to avoid the any poor investor experience on this, it could probably be greatly improved with enhanced education.
It's good you bring up education because our good friend of our network, well-known options educator, Alex Jacobson, passed away this weekend. So we've been asking a lot of people just about their thoughts about the state of options education. As you point out, maybe you need it now more than ever. Just looking at these numbers, up nearly 25% in April. A whole lot of new people are getting into the game, and they're going to be confronted with these zero-day Teslas and NVIDIAs pretty soon. So you could argue the need for quality options education has never been more pressing. What are your thoughts, Jim, on the state overall of options education and maybe what we could do more?
I mean, I got to tell you, so the history here with education, the options is impressive. It's the only asset class that I've seen where so much time and effort was spent educating the end investor on how to use the product. All right. To the point where a lot of the firms where they compete, if you're, a broker dealer trying to attract investors to your platform, you want to give them low rates. You want to give them a nice platform to kind of trade on. You want to give them good quotes. You want to give them good education. All right. And the education that is an area that firms compete in, right? Who can provide the best education? And it's really takes on, it used to go from like simple, like, this is an option, this is a call option, this is that. Then it went to like, hey, here's a way that you can maybe back test, play around with it, with like monopoly money, and now I feel like the next stage here is around helping investors test their own skills to understand like how much do I really know this product, and giving me the ability to kind of like self-assess my knowledge in it. I think it's great. I don't see that anywhere in any other product that's out there, and it is definitely a major contribution to the option success.
It's fascinating to me. Obviously, you run a Securities Traders Association, but it's not all stocks at the end of the day. I've been to STAC many times. I'd say fully a third to a half of that event now is option centric. You have a lot of affiliates around the country who are doing something similar. And from your perspective, how much penetration is there now on the option side? How much are your affiliates focusing not just on the equities, but now on the options and other assets?
Yeah, I mean, that's a great question. I mean, obviously the fungibility of the product. What I'm kind of seeing is I see other asset classes coming to the options conferences because they realize that that's becoming part of their core product, right? We had the event in Chicago and STAC. We had 2 years ago down in DC. A lot of ETF people are starting to attend the conference. They realize that, listen, we got to understand how the options on our products, work. The liquidity that they bring, how they're, help as a risk management tool. And so it's really kind of like, I kind of look at options kind of sitting in the middle. Because of the fungibility of the product, that you can have options on crypto, you can have options on ETFs, equities. And when those other asset classes start to mature and they realize like, wow, we need to kind of like, maybe put 20% of our time into this options, understand how it's impacting our asset class. I think that's what we're seeing.
Jim, I like talking to you because you always bring up some interesting areas of the security space that you folks are grappling with right now over there at STA. And you brought one to my attention, which is kind of fascinating. Not one we've talked about before. We've talked obviously a lot about China on this network in recent months, quite a bit for obvious reasons. But even before that, it was the prospect of bringing more options liquidity to China. But that reverse is also true. There's obviously a lot of ADRs trading here. Sometimes when those go belly up or go the way of the dodo, the remnants can not be the best, especially for some of the, let's say, the longer term option side. I know that's something you folks are grappling with right now over there at STA. Why don't you get our listeners up to speed on what you're dealing with?
So I mean, obviously, we have this backdrop of China and tariffs, and not just China, but other countries as well. And recently there have been a handful of events, mostly coming out of DC, where there's been like a more intense focus on China and them accessing our capital markets, and should we be allowing that? Are they using our capital markets to access to obtain capital that's being used for companies or
It's
in
the old
China?
debate about the Chicago Stock Exchange all over again, right? Should they be allowed to buy
Should they
it?
be allowed it? I mean, are we kind of like, providing the means for them to grow companies that are not in our best interest, or or down the road here. So listen, I mean, this isn't the first time we've had this conversation. We've had Chinese companies delisted in the past. Trump did it through an executive order on 3 telecom companies back in his first administration. That was a little sloppy on how that was handled. Then we had the Russian sanctions that happened. That was even sloppier, as far as understanding which companies were impacted. And now, with the conversations kind of being a little bit more heated, we kind of feel like, okay, what role can we play here? Obviously, STA is not going to go down to Washington and tell them that they should or shouldn't be delisting Chinese securities. However, we do think that we can play a role in just putting together like an FAQs for frequently asked questions, or some type of a document to kind of help the regulators understand like what goes into delisting a company, because it's not just the underlying stock. It's actually options, it's ADRs, it's ETFs, it's mutual funds. So because sometimes they, down there, as you know, Mark, they listen, they're all lovely people doing God's work down there, but they sometimes they just think we'll just delist it, like throwing an on-off switch, and they don't realize they don't appreciate the ramifications of how this plays an option. So I don't know what's going to happen. I'm not making any predictions on it, but I would just say that there's intense pressure on here. This is more than just originally this used to be kind of approached from like an investor protection issue. Like, are U.S. investors getting enough information and transparency into Chinese companies to make an investment decision? But now they're talking more around obviously national security, and that takes it to a completely different height of seriousness. And if they do start delisting in the interest of national security, that's something that could happen like quick and furious, and we just obviously want to have something in place so we can do this as quickly and as safely as possible.
Yeah, not a lot of time for nuance when it's
No.
national security. It's just bam, they're
It's
gone.
done.
And you're right. So for vestigial things like leaps, and you're right. There's a lot of nuance that needs to be worked out.
Yeah, I'll just give you two examples of nuance. With the Russian sanctions, the government never provided a list of companies. They just said you can't trade any companies that are Russian. Some firms were like, I got 12. How many you got? I got 16. And then there was another nuanced thing too, where DTC, where they stopped clearing the trades like the day that they stopped trading. Like they didn't like to think to like, all right, so they're going to stop trading on Tuesday. Maybe we should stop clearing them on Thursday. Like and when it was a T+2. So some of these things are basic, blocking and tackling that we're kind of trying to avoid. That investor, because it's an investor confidence issue. We don't want to do anything that kind of harms that.
Well, Jim, it seems like every few years, whenever there's a budget crisis in some municipality or somewhere, some genius politician gets it in their head to, there's free money in these transactions. Well, let's go after that. I kind of thought this was done, but it does seem like it rears its ugly head every 5 or 10 years. It seems like we got some new people taking a spin at that. What is the latest on the transaction tax front, sir?
I wish it was every 5 or 10 years. I feel like it's like every 2 or 3 now. So we had New Jersey try to put one in place. A couple like 2 years ago, they at least New Jersey realized that the actual, crossing and trading gets done on the servers in New Jersey, and now New York is trying to put in a financial transaction tax as well. I don't think they're going to be successful with it, but it's going to take an effort. It's going to take an effort, and we kind of where this is going to come down to is probably where we'll take the same approach that we took with New Jersey. Is that on these transactions, New York State does not really have the right to tax somebody in California on buying 100 shares of Tesla that's trading in New Jersey. Like, explain to me how New York has a right to tax that transaction. So listen, but like it never goes away, Mark. They look at these signs, they put a figure on it. They they have tremendous deficits, and they're seeing, we can do this and we can make somewhere between $1 billion and $6 billion. It's like,
I love the projections too.
I know.
Those are always the best. It's just free money. It's a victimless crime. Fractions of a penny on every. What's the worst that could happen?
Yeah, it's not going to impact anybody. No one's going to adjust their behavior.
Just the fat cats. That's all you're going after, Jim. It's perfect. Victimless crime. Yeah. So unfortunately, it does seem like this is coming back again. Luckily, it seems to get defeated every time. saner, calmer, cooler head. And they realize, wait a minute, what about my 401k? What about all the things I like to trade? What about everything? Then they start to realize that. But yeah, it's unfortunate we have to have this conversation. Seems like every few years. Let's switch back to happier stuff. You guys have another big event on the horizon, going back to the Mecca, going back to DC for the STA National Conference in October again, I believe. Jim, give us all the details.
Yeah, no, we're excited. I forget the dates. It's around the second week in October to be in Washington D.C. Full 3 days of content. We're looking forward to it. I don't want to get too optimistic or get too far over my skis here, but I do think it's going to be our biggest event that we've had down there. I'm basing that on how well the events have gone in Chicago and New York. They both have seen incremental increases. So there's a lot on the calendar. We have a new chairman coming in, right? We have a new chairman coming in, Paul Atkins. So, and there's just a lot of things going on, and a lot of things that are exciting. We do feel that the stuff that we hear, even with Nasdaq as an example, we've been talking about zero DTs for a long time. It looks like they're going to finally come. That's an opportunity. That's growth. That's someone playing offense. And we're seeing that in ETFs and we're seeing it in equity. So we're optimistic with how this event's going to go in October. And we're looking forward to seeing everybody down there.
I like leaving folks on a note of optimism, Jim. And if folks want to check out and learn more about the upcoming event or anything you folks have cooking over there at STA, where should they go? What should they do, sir?
Oh, securitytraders.org.
There you go.
That's where it is. Or you can get us on LinkedIn or those are the two best ones.
Well, Jim, I appreciate you joining us for our annual check-in. I know it's more than annual now. We'll do it again down in D.C. and we'll have a good time. And Jim, I appreciate taking some time out of your conference to join us here at the Southern Studio, sir.
Thank you so much.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.